Bank of India posted a disappointing set of numbers yesterday. Slippages continue to be high and it reported a loss of around 4,700 crore rupees. Abhishek Kothari joins us to break down the numbers for us. Abhishek, good morning. Of course, the bank performance is weak, but wouldn't the fact that the net NPA has improved and the capital adequacy is now enough to bring the bank out of PCA the big positive for the stock today?
Well, good morning, Anisha. The key question is whether it really works out to be in beneficiary of bringing out Bank of India in terms of the PCA framework, because slippages for 11 years that I've seen their data continues to remain elevated and is hurting the credit cost of the bank or provisions for NPA. So even in this quarter, the slippages continue to rise and they are at 4,315 crore. That compares to about 3,800 odd crores. So if you look at the annualized slippage ratio, that is at 5.2% versus 4.5%, and that's very high. A stagnant or a good metrics would be slippage ratio anywhere between 1.5% to 2% given the current environment. So despite the fact that RBI has come out with CBS, that is core banking solution, AQR asset quality review, or the 12th Feb circular, the increase in slippages is a cause of worry. So bank has reported a net loss of 19,620 crore in the last 3.5 years of 14 quarters. So there is a slight improvement in the gross NPA, which has come down by 5 basis points to about 16.31, but it remains elevated. However, as Anisha mentioned, the net NPA is below the 6% PCA or prompt corrective action threshold. So that is at 5.87%. The bank reported a gross NPA divergence, the difference between what RBI says and what the bank reports, but that's at a mere 245 crores. So net, if you look at the net NPA, there is a negative divergence over there of about 1,174 crores. The net interest margin improved in this quarter, both on the global, domestic and the international book. The NII is higher than our poll. However, the net loss on account of higher provisions is way higher than our poll of 784 crores. Coming on to SDFC Limited, the key thing to watch will be the stability in NIM. Net interest margin will be positive. We have seen SDFC raising money at 9.5% in Q3. So how that pans out in terms of cost of funds will be seen closely. The AUM growth or the loan growth can come down to about 15%, and last quarter it was a 17%. We have seen NBFC struggling with the disbursal growth in Q3 on account of the liquidity crisis. The lower capital gain and dividend income will likely lead to decline in earnings on a sequential basis. However, asset quality is expected to remain stable. Gross NPA below 1.2% will be positive. Our poll on a sequential basis suggests that NII can grow by 11.5%, while net profit can decline by 15.5%. Back to you.
Okay, all right, Abhishek, thanks so much for that. But I think the biggest number today will be Axis Bank, in terms of market sentiment. That's going to be a rather important set of numbers. Abhishek, what do we expect out there?
Well, Nigel, to begin with, analysts will be seeing the slippages number and how they come out. Now, this quarter, analysts are working with a slippage of 4,800 to 5,000 crore. Last quarter, it was at 2,800 odd crores. But we need to see how the slippages come out. Now, remember that in the previous quarter, the 2,800 crore had 88% of the slippages coming in from the known level of watch list. So BB and lower rated book, which is the actual watch list of the bank, stands at around 16,500 odd crores, and if that improves significantly, that will be positive. And if the watch list mainly, if the slippages come mainly from the watch list, then it will be positive. The asset quality movement will be seen closely. Gross NPA was at 5.96 in the previous quarter. Analysts on street are working with a 30-35 basis point improvement in the gross NPA of the bank. The loan growth, which if you look at the historical 4 out of 5 quarters, has been in the region of 14 to 20%. So last quarter it dipped down to 11%. So anything between 10 to 12% or above will be positive. The improvement in net interest margin will be positive. We have seen with private banks commanding a good pricing on their products, and that is leading to improvement in the yields on advances. So if that continues for Axis Bank also, then the net interest margin improvement will be positive. They have an exposure to IL&FS 825 crore, but out of that, around 540 crore is already in the watch list. So nothing much to worry over there. Our post suggests NII growth of 14.5%, while net profit can be the highest in last 6 quarters at about 1,276 crores. Back to you.
Okay, Abhishek, thank you so much for that.